It is 8:52 a.m. Pacific Daylight Time. It's the 23rd day of October, 2025, and this is episode 1196 of Bitcoin. And I had a thought a couple of minutes ago, and it boils down to this notion of money is the root of all evil. And people will say, no, that's not true. It's the love of money is the root of all evil. I'm contending that even that's not true. That's not what's evil. It's our blind trust and apathetic approach to what money is, what does it cost, who controls it, and where does it come from. That is the actual root of all evil. Even when money was private, I can almost guarantee you that the people using that money were also apathetic. Probably not to the degree that we are, at least in the West. You know, I'm sure that there's a lot of people in Africa and Latin America who do ask these questions at a scale much larger than in the United States or the UK or Europe or any place else that's considered the West. But the fact remains the same. Money is not evil. The love of money is not evil, although that feeds into it. It's our apathy, not only to everything, but especially to what is money. We don't know what money is. We don't know what wealth is. We don't know what legacy is. It's like we've been given a forget everything drug by somebody, and I'm not even going to conjecture who, that's made us literally forget all of these questions that we should be asking ourselves on a continual daily basis. What is money? Where does it come from? What does it cost? What is actual wealth? What does it look like? What does it mean? And when it comes to legacy, how do we pass wealth down? What is legacy? Is it just passing wealth down? No, there's a lot more to legacy than that, and we know nothing about it. That's what is evil. The love of apathy is the root of all evil. And I'm starting you off that way this morning because I want to read right out of the bag this post from David Collum over there on X. He says, Diamond may not fully appreciate the scale of the threat. The collapse of auto parts maker First Brands has revealed an enormous fraud at the center of the $2 trillion market for leveraged loans. Based on losses reported so far and the numerous acts of fraud emerging, half of the leveraged loan market may end up being lost to investors. And it seems he's saying that is a quote from somebody on Twitter or X or whatever named or handle of @RC Whalen, WHALEN. Why am I even talking about that? This is directly attached to the tricolor collapse and I can't remember the name of it right now, but I brought you a story about another auto loan maker. We've got a major issue brewing in the auto industry in the United States that has now gone beyond people making auto loans to auto parts makers. It's now officially a contagion. Be very, very careful about everything at this point. And of course, I know that you always are. I'm just saying, be aware of this. First Brands makes parts for cars, and they have gone bankrupt. And that was actually announced on October the 14th, so quite a few days ago. But now, after some audits have been done, it seems that they've gotten caught with their hands in the auto industry loan making infrastructure cookie jar. Again, be careful. Now, you're here because it's all the news that you can use and more about Bitcoin. So we're going to talk about strategy, but not in the way that you think. Finally, some manna from heaven about these people. And then I want to touch just a few bits about what am I looking at? Oh yeah, Coinbase and their crypto payments and AI. You know, what could possibly go wrong? Peter Schiff is making waves with a gold-backed credit card. Again, what could possibly go wrong? And then we're going to talk about the political divide between left and right and where Bitcoin stands between those two groups. The USDA Secretary Rollins came out yesterday and basically put a steaming pile of crap in front of all the ranchers who have been just wanting any kind of direction in the United States for cattle prices, ranching in general, competition with Argentina and Brazil in their beef industry. And what Secretary Rollins handed down looked like it was good. It's kind of not. But we're going to hang out in LATAM for a little bit more. We'll talk about Latin American banks using stablecoin and why. And then, speaking of stablecoin, Tether is funding, well, a bank. We'll get to it, promise. And then, Moon Incorporated is raising $8.8 million for a prepaid card with Bitcoin involved in it. And then Polymarket, we'll get to it. We'll get to that. But first, let's get into the strategy business. Am I going to be talking about strategy and a new debt instrumentation? No, I'm not. I'm actually not. They've released a product called Mosaic, or at least it seems. This was actually released on Strategy's website, October the 17th. Mosaic, seamless modeling, connected insights. Now, this is not really the blog post that I should be reading to you. So I ran it through AI. Yes, AI, to get a little smattering of what's going on here, because Strategy just rolled out something called Mosaic. It's a product. It's an honest to God product. It's something that they can sell or at least rent to somebody to make revenue. So what the hell does it do? Think of it as an AI powered data mechanic, I guess, a system that actually understands what you're trying to do. Instead of writing code or hunting through dashboards, you just tell it what you want to know, and Mosaic connects the dots for you. It builds the model, it grabs the right data, even writes the SQL behind the scenes. It also keeps everything consistent when you're jumping between tools like their something called Power BI or your own company's dashboards. The numbers line up, the look stays clean, and everything loads a lot faster. Mosaic is taking the grunt work out of working with data. You spend less time wrestling with setup and more time actually thinking, exploring, and deciding. It's like giving your data team their own AI shop foreman who keeps the engine humming while you focus on driving. Okay, so that was sort of like a rundown by AI when I gave it the blog post and a couple of other items out of Strategy. What's important to note is that Michael Saylor had been talking about that they were going to be doing something at Strategy with AI, and it looks like this product called Mosaic is it. I actually don't give a shit if what I just said is being met by you guys on the other end of this microphone saying, dude, we could just do that with ChatGPT or Perplexity or whatever. I get it. It kind of sounds that way to me too. All I care about is the fact that, lo and behold, after me bitching, wailing, moaning, and crying and curled up in a fetal position about the only revenue that Strategy is been able to make over the last, 3 years, is just selling debt instruments to rubes on the street. This is something they will be able to sell to businesses. Somebody somewhere is going to buy this thing, and somebody somewhere is going to give the money for it. And that means that Strategy has a revenue stream for the first time in God knows how long. So yay, I'm actually happy. I know I'm not a Strategy fanboy. I'm just saying that you got a company like Strategy that holds that much Bitcoin and has no revenue whatsoever, could easily cross over into the land of the undead and just be a zombie company. But it looks like they have something in the pipeline. I don't want them to be zombies with over 640,000 Bitcoin chilling out on their balance sheet. I want them to actually be making money. And it looks like they figured out a way to make some money. We'll see how it goes, but at least we're in a position where we can say, dude, all is not lost. Until we go over to Coinbase, because everything at Coinbase is a steaming pile. And this one is too, and it also involves AI. Wait for it. Let me take a deep breath here. Oh, Zen, master, Zen. Coinbase links artificial intelligence to crypto payments with new protocol for autonomous transactions. Again, what could possibly go wrong? Maybe Jason Nelson from decrypt.co will be able to tell us. Coinbase is linking artificial intelligence directly to crypto payments with a new system built on the Model Context Protocol, otherwise known as MCP, that lets AI agents hold wallets, send stablecoin payments, and interact with online services. The launch of, quote, Payments MPC connects AI to on-chain value transfer at scale, giving machines the ability to transact autonomously through a standardized protocol. Payments MCP builds on X402, Coinbase's open payment standard based on the long unused HTTP 402 payment required code. It works with Anthropic's Claude, Google's Gemini, OpenAI's Codex, and Cherry Studio, allowing agents to create wallets, on-ramp funds, and send stablecoin payments directly from a prompt. Oh joy. Quote, crypto is uniquely suited to machines, Eric Rappel, Coinbase's head of engineering for its developer platform, told Decrypt. It is the only open digital native standard for payment that any program can use, end quote. Rappel said, the naming of X402 was intentional and rooted in a long-running effort to build an internet-native payment standard. Quote, people have been trying to create an internet-native payment standard since the 1990s, he said. Continuing, Mark Andreessen and the team at Netscape explored it while navigating credit card systems and trying to build true internet payments, end quote. When HTTPS arrived, Rappel explained, people finally felt safe sending credit cards online and payments modernized. Still, a standard had yet to emerge. Every merchant handles credit card data differently. The forms look similar, but the processes between computers are always unique. Quote, AI agents are just smarter programs, and they work best with programmatic interfaces instead of human optimized systems. Now, oh my God, now, with AI agents needing to exchange value programmatically, we finally have the tailwinds to make an open standard possible, a technology 10 times better and more accessible than before. Coinbase says Payments MCP makes it simple for users to experiment with AI-driven transactions without writing any code. A built-in interface lets users create and fund wallets with only an email address. No developer setup or API keys required. Through the X402 Bazaar Explorer, and Bazaar is spelled B-A-Z-A-A-R, like marketplace in Turkey. Bazaar Explorer, agents can browse APIs and services they can pay for directly inside the app, and at the same time, an integrated on-ramp and guest checkout lets them begin transacting almost instantly in supported regions. Users can also set spending limits and manage approvals through an easy configuration panel. For privacy and speed, the systems run locally. Oh, joy. Coinbase describes it as a bridge between developer tools and mainstream use, making agentic commerce, and that's in quotes, agentic commerce, accessible beyond the coding crowd. The initial release integrates with Claude, Gemini, Codex, and Cherry Studios. ChatGPT is not included because the current transport method used by Payments MCP is incompatible with the streaming variant that OpenAI's chat product currently uses. However, support is planned for the future. Each agent wallet has configurable funding limits, approval thresholds, and session caps. Quote, the quality of safeguards depends on how programmable the money is. With Payments MCP, you can set limits for your agent. They have dedicated funds you explicitly give them. They don't have access to your main wallet. It's impossible for an agent to rack up a credit card bill that you're responsible for. End quote. That was Mr. Rappel. He added that developers can build rules engines on top of X402 to manage permissions. Quote, you could, for example, let an agent spend up to 10 cents freely, but require approval for anything higher. It's all about what the tools and technology allow developers to build in. Rappel said Coinbase's compliance framework mirrors its technical safeguards, with checks built into every layer of the system. Quote, Coinbase follows all relevant KYC regulations at the points where users enter and exit the system. We handle this under the hood, so it doesn't affect the user experience. That's part of the value of using CDP tools. We build as much compliance as possible directly into the products, end quote. Coinbase and Cloudflare are backing the X402 Foundation to maintain the protocol as company-neutral infrastructure. Quote, companies want to build on open protocols that remain usable whether or not Coinbase exists in 2 years, Rappel said. He predicted 2026 will be the, quote, year of agentic payments, end quote, where AI systems programmatically buy services like compute and data. Quote, most people will not even know they're using crypto. They will see an AI balance go down $5 and the payment settles instantly with stablecoins behind the scenes. All right, so that's it for this little tidbit. There's two things here. One, this was going to happen regardless of who did it. There's people that are nostr developers that are working on this, right? Coinbase is very well funded. It does not surprise me that it was Coinbase that is probably going to have a stranglehold on this, at least in the near term. Second thing is that it's Coinbase, one of the most despicable, detestable companies in this space, and I might add, on the face of the planet, infecting with complete disgust the face of God's creation. I'm serious. I'm not being hyperbolic. Coinbase is a terrible company. And it's not just because that they have problems on the back end when volume spikes. That's anybody. No, I'm talking about their dear leader, Mr. Baldy, who signed his name to the New York agreement thinking that he was going to change Bitcoin. This is not a man who likes Bitcoin at all. It just made him his billions of dollars, but he hates it. And anybody who thinks that he doesn't is really fooling themselves. He's like he is just nothing but a very, very wealthy shitcoiner. That's all he is. And the fact that it's his company that has seemingly, and I don't know this because, again, what could possibly go wrong, but until that happens, seemingly succeeded in machine-to-machine payments in an automated way. Because that was always going to happen. I I can only hope that this fails miserably and is a complete black eye to Coinbase, and somebody else picks up the ball and does it actually correctly. But my fear is, because Coinbase is so well funded, that they may have broken the first crack into the ice that is automated machine to machine payments on the internet. And it's sad to see. And Peter Schiff is just unrelenting in his onslaught. In fact, he's released a credit card, or is about to release a credit card that the money is backed by gold. It allows you to spend your gold and can do all the things that only Bitcoin ever wished it could do. Well, Changpeng Zhao, otherwise known as CZ, calls Peter Schiff's tokenized gold a "trust me bro" asset. Amin Hasquanas from Cointelegraph, tell me more, brother. Binance co-founder and former CEO Changpeng Zhao dismissed crypto critic Peter Schiff's plan to launch a tokenized gold product, calling it a "trust me bro" asset. In a Thursday post on X, CZ said tokenized gold is not on-chain gold, but a promise dependent on third-party custody. Quote, "It's tokenizing that you trust some third party will give you gold at some later date, even after their management changes, maybe decades later, during a war," he wrote. CZ's comments come after Schiff, a longtime Bitcoin critic and gold advocate, announced plans on the Thread Guy podcast to roll out a gold-backed token. According to Schiff, users will be able to buy and store gold in a vault via an app, transfer ownership through a blockchain, or redeem it for physical gold. He describes it as an easier way to spend gold digitally, complete with debit cards linked to gold holdings. Okay, so not credit card, but debit card, but whatever, it doesn't matter. Schiff also maintained his decades-long stance that Bitcoin has no intrinsic value and will go to zero. He's gigantic pump and dump driven by early adopters, yada, yada. Quote, I still think it's going to zero, he said. Quote, "What I underestimated was the gullibility of the public and the marketing savvy of those promoting it," end quote. Schiff also warned of a looming sovereign debt crisis that he believes will dwarf 2008, predicting hyperinflation, a collapse in the U.S. Treasury bond market, and gold prices rising well beyond $4,000 per ounce. He said the U.S. dollar's dominance as the world's reserve currency is nearing its end, predicting that the global financial system will inevitably return to gold. Foreign central banks are already divesting from U.S. treasuries and quietly replacing their reserves with physical gold, marking a monetary reset similar to the post-Nixon 1970s, Schiff added. And then they talk about gold losing $2.5 trillion in market cap. It doesn't matter. Here's the thing. There's already a gold-backed token, and I can't remember the name of it, but it's Tether. It's a version of Tether, but it's backed by physical gold. And the guys over at Tether own a lot of physical gold. They also own a shit ton of Bitcoin. They also own a lot of land. They also own agricultural stuff. And as we'll see, they're getting into banking, but we'll get to that one later. What I'm trying to say here is that Schiff is he didn't invent anything new. We've already got a gold-backed stablecoin, and if you need to use it, just go use the one from Tether. You know, Schiff has introduced a lot of products over the years, and some of the last few have been essentially targeted at replacing Bitcoin, and none of them have worked. You know, I just don't get Schiff. The only thing that I can surmise at this point is that he's just engagement farming. That he doesn't really hate Bitcoin the way that he lets on. And the reason I say that is it's not wishful thinking, because Schiff is just one guy. Yeah, he's got a decent audience, but it's not like, it's not like a billion people are hanging on his every word. Most people in the world do not know who Peter Schiff is. But be that as it may, he still has a sizable audience. And every time that he tweets something out about how bad Bitcoin is, the amount of engagement that he receives is so far beyond his normal engagement that I think he's become addicted to the dopamine, and he's not he doesn't realize he's addicted to the dopamine hits on Twitter. He doesn't understand that that's what he's addicted to. All he sees is that every time I shit on Bitcoin, I get engagement. He's a junkie. He's a junkie. Most Bitcoiners believe the exact same thing Schiff believes, except they differ on the mechanism. In this case, gold versus Bitcoin is one or the other. All the people that are in the Bitcoin space that I truly respect actually like Bitcoin and gold. Bitcoin and gold. I don't need to choose one or over the other. I do not own any physical gold for various reasons. I personally don't think that I can use it. I don't think that I can. It will not provide me the utility that Bitcoin provides me. But that's my life. Now, that could change. What if I move to some small rural town and there's a whole bunch of other people there that also like gold? It would not surprise me that a town starts using physical gold as local currency, much like Galt's Gulch in Ayn Rand's Atlas Shrugged, where they use nothing but gold. The problem is I'm going to be reaching digitally outside of that town. I wouldn't mind carrying gold with me, like small gold coins that are worth $5, $10, $20, whatever, pick your denomination, and paying for, physical eggs and meat and milk, from local farmers and whatnot like that. I wouldn't mind it one bit. But how much gold do I have to carry if I want to buy a house there? Maybe then Bitcoin becomes my optimal route. So this is why I literally don't mind both. And if I want to buy something way out of town, like in another state, and get it delivered to me, I'm not driving my happy ass over to that state to pick it up so that I can physically deliver gold. No, that's where I use Bitcoin. These things solve certain problems. And I'm not saying rush out and buy gold. I'm just saying that I don't hate it. It doesn't make me sick. Going back to what got me to this little rabbit hole in the first place was that all the Bitcoiners that I know agree with Peter Schiff. Like when he says, let's see. He says something about, what was it? Hold on. I'm looking. Okay, I missed it, but he was basically saying that he believes that the bond market for U.S. Treasuries is gonna collapse. Probably, it's probably going to get to the point where the only people that want to buy it is the Federal Reserve, and they'll just print money to do it. He's right. Schiff is right about lots of things. There's only one thing that we disagree on. And that's why I got a sneaky suspicion that he doesn't actually hate Bitcoin and that he's addicted. He's an addicted junkie to X. He needs the attention. He is an attention whore, but he's right about a great many things. I still have hope for Peter. I don't think he'll start buying Bitcoin. And a lot of people already think he's got a shit ton of Bitcoin. He may. But I don't expect him to just turn over and start saying rah, rah. But my God, just watching him spend all his time trying to get attention by bashing Bitcoin it's a little sad, honestly. And it makes me hungry when I see sad. So I'm going to go over to oshigood.us. That's OSHIGOOD.us. oshigood.us. Products page is a little scant because he keeps selling out of everything. Why? Well, because A, he takes Bitcoin for his goods and services, and he's got the best crunchy coffee hodl butter in the business, and you can get 16-ounce jars of this stuff, which I never really got a taste of. I mean, I got a taste of it when I first got it, And then all of a sudden, next thing I know, my wife absconds with it for her morning toast. And lo and behold, I have no more. So I'm going to have to get some more. But you can go to oshigood.us, use the code Bitcoin and to get crunchy coffee hodl butter. What's in it? Well, let me tell you. Pecans, maple sugar, roasted Arabica, coffee grounds, sea salt flakes, cinnamon, and black pepper. Dude, it is not sweet. It is not like overpowering, coffee tones. It's like a flawless sea of flavor, all wrapped up in a beautiful glass jar. Spread it on toast. I've seen people spread it on cooked steaks and swear up and down it is amazing. That one I haven't tried yet, but one of these days. So go to oshigood.us. Get yourself a couple of jars of crunchy coffee hodl butter. Make sure you use the code Bitcoin and so you're telling Oshi that you heard about it here on the Circle P, because if you're not taking Bitcoin for your goods and products, you're not in the Circle P, or goods and services, you're not in the Circle P. It's where I bring plebs like you that have goods and services for sale in Bitcoin to plebs just like you who want to buy it in Bitcoin. Again, you got to be using Bitcoin to be in the Circle P. And Oshi over at oshigood.us does it. Be sure to use coupon code Bitcoin and. All right. Bitcoin transcends the left-right political divide. It's a tool for human rights. This is out of Bitcoin Magazine, written by Frank Corva. 1 month ago, Hash, an alumni of the MIT Bitcoin Club and an organizer for the MIT Freedom Tech Expo, told me in an interview about how a friend of his who is a social worker in Nepal and who was on the ground during the recent protests in the country doesn't like Bitcoin. Quote, there's a lot of people with left-leaning ideology who still think Bitcoin is a capitalistic tool, and they're not very comfortable with it yet, explained Hash. Well, I've been thinking a lot about this point that he made since we spoke. As someone who was formerly more politically liberal, I still have a lot of friends and acquaintances who seemingly shudder at the mere thought of my writing about Bitcoin for a living. I get the feeling that they think I've become some right-wing fanatic who only cares about money. I can see why they might think that, despite it not being true. In the U.S., Bitcoin has very much become synonymous with the Trump administration, and most of what the average person sees about it in the mainstream media is reporting on its price going up or down. Put another way, if you're not intentionally searching for stories about how Bitcoin facilitates financial inclusion, the freedom to transact, and protection from inflation and currency debasement, then you aren't likely to find them, which means that the average person hardly, if ever, gets exposure to the human rights side of the Bitcoin story. And so, if you're looking for some examples or thoughts to share with friends of yours who may be on the political left and don't like Bitcoin as a result, well, I've included a few below. So, financial inclusion. One of the most powerful stories in Bitcoin enabling financial inclusion is the story playing out in the informal settlement or slum of Kenya's Kibera right now. Kibera is the largest informal settlement in Africa, and thanks to the hands-on work that Afrobit Kibera is doing to educate members of the Kibera community about how to use Bitcoin, more and more of Kenya's poorest and most financially vulnerable have been brought into the digital economy and are saving for the first time in their lives. The story of the work Afrobit is doing was highlighted in a recent segment by the BBC. One of the points that was not mentioned in that segment, though, is that many of the residents of Kibera are refugees from other African nations and are currently ineligible for a national ID. And without that, these residents cannot use M-Pesa, a digital payment system that is ubiquitous in Kenya. However, with a Bitcoin Lightning wallet and Tando, a homegrown Kenyan app that enables payment in Bitcoin and settlement in Kenyan shillings, these members of the community can take part in the digital economy, as neither require know your customer checks. Yes, I know some custodial Lightning wallets require varying degrees of KYC, but non-custodial Lightning wallets don't. Then we have freedom to transact. Most of us in the West take for granted our freedom to transact over digital payment rails like PayPal, Cash App, or Revolut, which means we haven't had much reason to think about how devastating it would be if our accounts via those services or our bank accounts were frozen or shut down. However, activists and dissidents around the world, especially those living under authoritarian regimes, see their accounts closed often when they speak out against the powers that be. Debanking people or organizations that challenge the power of authoritarian rulers has become one of the first moves in the dictator's playbook. One of the most flagrant cases of this is when the Putin regime shut down the bank accounts of opposition leader Alexei Navalny's anti-corruption foundation. With that said, we also saw a wave of debanking in the United States under the Biden administration. During Operation Choke Point 2.0, the Biden administration debanked a number of Bitcoin and crypto companies seemingly for no reason other than that they were politically out of favor. This proves that while the banking system and fintech companies are technically still private institutions, it only takes a certain amount of pressure from these powers that be, even democratically elected officials, to stop people and companies from being able to freely transact. In her book, Broken Money, Lynn Alden highlights the importance of Bitcoin as it pertains to this issue. She states that self-custodial financial services force governments to actually charge people with a crime before they can use pressure to freeze their accounts. Alden added that Bitcoin is bigger than political ideology in this regard. Quote, Bitcoin is not a right or left issue, because one merely needs to imagine their least favorite politician winning the next election, or 2 or 3 elections from now, she wrote. Many who are familiar or unfamiliar with Bitcoin do not understand the significance of its capped supply. There will only ever be 21 million Bitcoin. A perfectly finite supply of money contrasts starkly with fiat currencies, which have no supply cap. Fiat currencies can be printed to no end, which devalues the time and labor of the users to these currencies or of these currencies. Those of us living in the United States have felt the pain of this currency debasement, as inflation levels have been notably higher here. However, it's important to note that the US dollar is essentially the prettiest pig in the pen when it comes to fiat currencies, or also known as the fastest horse at the glue factory. Most other currencies are being debased at a more alarming rate, with the most severe instances of this being what has happened in countries such as Venezuela, Lebanon, Argentina, and Turkey. This is why when Sabina Wathira, one of the co-founders of the aforementioned Tando, teaches university students in Kenya about Bitcoin, she highlights that it offers freedom from inflation. Bitcoin itself is politically neutral. Since Bitcoin is an open protocol and isn't governed by one person or institution, it isn't and cannot be inherently political. Sure, the Trump administration has taken a pro-Bitcoin stance, which may be off-putting to those on the political left, but that doesn't mean Bitcoin doesn't facilitate notions like financial inclusion, an issue that liberal politicians tend to support. So, if your politics are more aligned with liberal ideology, be sure to check out the work of the Progressive Bitcoiner nonprofit, as well as Jason Mayer's A Progressive Case for Bitcoin. And if you find yourself politically homeless, but still a proponent for human rights, as they're enabled by Bitcoin, be sure to learn more about what the Human Rights Foundation is doing via the Financial Freedom Division and subscribe to its Financial Freedom newsletter. Bitcoin is a tool for all human beings, those across the spectrum of the political right and left, and it's high time that this message becomes more widespread. Let's run the numbers. CNBC futures and commodities. I got oil. All the energy sector is doing really well today. In fact, the energy sector is doing better than the, let's see, where are they? Where's my shiny metal rocks? Oh, there they are. They're right there. Doing way better than shiny metal rocks. I don't know what happened today, but Brent North Sea oil is up 5.5% to $66.04 a barrel. West Texas Intermediate itself is beating it 5.79% to the upside, puts it back above 60 at 61.89 a barrel. Natural gas, being the natural hedge that it is down a half point to $3.42. Gasoline is up 3.3% to $1.92 a gallon, and Merbon crude is up 7.1% to $69.28. Meanwhile, gold is only up 2.22% to $4,155.50. Palladium is up 1.8. Platinum is up 2 1/3, as is silver, and copper is up 2.15%. Most of ag is in the green today. I guess everybody's having a good day. Wheat is the biggest winner, 1.5 to the upside. Biggest loser is coffee, 2.6 to the downside. Live cattle up 0.84%. Lean hogs down a half. Feeder cattle down a third. S&P is up 0.4. NASDAQ is up 0.67. NASDAQ, sorry, I just said it. Dow, the Dow is up 0.14%, and the S&P Mini is up almost a full point. Well, good for you. Bitcoin is up to $109,760. That is a $2.19 trillion market cap. We can only purchase 26.5 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,938,582.41 of. And average fees per block are low again, 0.02 BTC, taken in fees on a per block basis. Looks to be about 20 blocks carrying 51,000 unconfirmed transactions waiting to clear at high priority rates of 3 sats per VByte. Low priority gets you in at 1. We are holding at exactly a 1.1 zettahash per second hash rate. That is all of the protection that Bitcoin could ever need, and much, much more. All right, from Yo Soy Bitcoin, where Brent Kearney with 2,100 sats says, on BC Hydro, yes, it's crappy that the state is now picking who gets electricity, but the unmentioned context is that there are many independent generators who sell power to BC Hydro and are free to make their own decisions. The government just set up a mega dam called Site C, and as a result, no longer needs to buy from many of those smaller generators. So they are seeking new customers. Also, there are many off-grid miners operating in the province with their own generation, such as Iron. Okay. Thank you for the context. I appreciate that. The only way that I can get news, or especially, like the context of particular news stories, is people like Brent taking the time to write me to say, hey, you didn't mention this. Let me detail it for you. I will read it. I don't mind being wrong. I don't. If anybody thought that I was going to get my feelings hurt or my panties all in a little wad because I'm clearly wrong about something, I do not operate that way. I am not here for me. I am here for you. So Brent, thank you for bringing that to my attention. Psyduck with 755 says, Psyduck, I think that might be all. Is that all that I got today? It is. It's all that I got. Oh my God. I am sucking so much swamp water here, ladies and gentlemen. Need some more donations. It's like, I might not need to self-soothe myself with always being right, but I wouldn't mind taking a big old luxurious bath in a lot of sats. So keep them coming, guys. Keep them coming. That's the weather report. Welcome to part 2 of the news that you can use from Washington, D.C. Yesterday, October the 22nd. Secretary of Agriculture Brooke L. Rollins, Secretary of the Interior Doug Burgum, Secretary of Health and Human Services Robert F. Kennedy Jr., and Small Business Administrator Kelly Loeffler announced a suite of actions to strengthen the American beef industry, reinforcing and prioritizing the American ranchers' critical role in the national security of the United States. And they go on in this official release, this is the press release from USDA. All the ranchers have been sitting on pins and needles for weeks. And you might be asking yourself, oh, well, but cattle and beef prices are at all-time highs. You know, why would they be sitting on pins and needles? Well, admittedly, some cattle ranchers are doing just fine. Others, not so much. Herd size hasn't been this small for, in my opinion, forever. I don't think there's ever been a time that the herd size has been this small, but other people that probably know a shit ton more about it than I do say it hasn't been this small in 70 years. And there's various reasons why. So even at high prices, if you don't have very many cattle to sell, you really don't get that much money. Let's just keep it real plain and simple. So these guys have been waiting because, like yesterday and the day before, we've had news about Trump saying we're just going to buy cheap meat from Argentina. Well, like I said, this is one of the things that I don't like about Orange Man. Why Argentina? Why don't we do some things here at home that could alleviate the pressures on American ranching, American cattle slaughter, American meat packing? You know, people think that Tyson is an American company. Why do I mention Tyson? It's one of the 4 major meat packers, and yes, they do pack beef, not just chicken. Most people say, oh, well, it's just chicken and turkey. Well, no, they pack it all, Betty. It's not an American company. It's listed as an American company. Go look who owns Tyson. Go look at who owns Tyson. Not an American company. We have 4 meat packers in the United States, and none of them are fully, wholly owned by the United States or an entity within it, a straight up American company. You got JBS is definitely Brazil, 100%. You got all these other companies. They're not, all they do is set the prices. And when Trump said, and he did say this, by the way, American ranchers have to figure out a way to get their meat prices and cattle prices down. How? How would you do that? That's not the way this works, which demonstrates a fundamental misunderstanding of the way the fucking cattle market works. And I don't even know it. I'm not even going to pretend to know it, but I do know that it's not the cattle ranchers setting the prices. I know it's the meat packers. And you know what else doesn't help? Chicago, the CME, where beef futures are traded and cattle futures are traded. The futures traders have a little bit of say as to what things cost. This is why I don't like futures. I don't like derivatives. It is noise. But even without those guys, the cattle ranchers have got to take their shit to a sale barn, and they're going to get whatever it is that they're offered. And that price is generally set by who's going to ultimately buy the cattle, is the meat packers. And there's 4 of them, and none of them are owned by the United States. So yesterday, in all the glory and fanfare that you could possibly imagine, Secretary Rollins rolls out the USDA plan for the beef industry. What it's supposed to do is protect and improve the business of ranching. 2, it's supposed to expand meat processing, consumer transparency, and market access. 3, it's to build demand alongside building the domestic supply. Oh, well, okay. Gee, that's great. That's just awesome. So I simply started looking at the announcement and the other materials that the USDA laid down, and they say things like, oh, they're going to have labeling where, because a lot of the ranchers have been talking about MCOOL, MCOOL, like mandatory country of origin labeling. Mandatory, right? So if you raised it in the United States, it was born in the U.S., it was raised in the U.S., and it was slaughtered in the U.S., and the meat was packed in the U.S., you would be able to get a label that says product of USA. And you wouldn't be able to, you'd have to. I know we don't like being told what to do, but in this case, the ranchers want this. So let's give people what they actually want and give them the label. If it comes from Argentina, it does not get product of USA. That's what the ranchers wanted with MCOOL. Here's what they got. Voluntary labeling as product of the U.S. Voluntary, which means the meat packers can, we don't have to put it on there. And they might put something on there if they can, we got some of these cows here from the U.S. Well, sure, we'll throw you a bone. But 95% of the meat's going to be Argentina. We're not going to label it because you're going to buy it anyway. It doesn't matter. So right there, this whole deal is all bullshit. I wish it wasn't, but it is. And none of the ranchers are happy. One of the reasons why I got back on Twitter wasn't because I don't like nostr. I love nostr. And it's not because I wanted to get back with my Bitcoin guys, because most of those guys are compromised. Very, very compromised. Very, very, very compromised. Bitcoin Twitter is a shithole, but you know what is fun? Ag Twitter. Agricultural Twitter. Ranching Twitter. Cattle Twitter. If it has something to do with ag, it's on Ag Twitter. These guys are what the old Bitcoin Twitter used to look like. And they are not happy about this. They got hosed. And they are up in arms about it. So, what can you do about it? You can go find your local rancher and get to know that person. Shake that person's hand. Ask them to tell you about their operation. I guarantee you, they would love to hear from you. I remember when I first moved up here to Eastern Washington, I met some ranchers and I went out to their place. And one of the first questions I asked them is, how many people come out to meet you? And they looked at me and they said, aside from you, who actually wants to know how we do things and wants to look around, the only other people that darken this door of our ranch are people that hate us. Show your rancher that they are not hated. Go buy their beef, go shake their hand, thank them for feeding you, thank them for bringing you nutritious food. We've got to figure out a way to put the hurt from the consumer side onto Tyson, onto JBS, onto American Meat, even though it's not going to be an American company. It's bullshit. All four of them are foreign owned, and whatever the fourth meat packer is, don't care. We got to stop doing it. We got to stop doing it, man. That's the only way this works. We got no help from the USDA yesterday when this dropped. Speaking of Latin America, Zoltan Vardai from Cointelegraph says it, as inflation bites, Latin American banks on stable coins instead of bankers. The Latin American region is tapping into blockchain-based services for payments and access to financial services, signaling that the crypto industry serves more than just financial speculators chasing the next meme coin pump. Latin American citizens are increasingly using cryptocurrency to replace the region's inadequate banking infrastructure, allowing them to facilitate digital payments and create stablecoin-based savings accounts. Quote, LATAM adoption is quite high. People are using stablecoins for daily life, so it's a whole different market, said Patricio Mesri, co-CEO of cryptocurrency exchange Bybit's Latin American division. Quote, Crypto is actually changing the lives of people. You see adoption in Argentina, Venezuela, Bolivia, Mexico increasing rapidly, he told Cointelegraph during an interview. Some of the most interesting use cases include stablecoin payments to circumvent the high remittance fees of the Swift banking network and taking up crypto-based loans for major purchases such as cars and homes. Countries like Argentina, with annual inflation surpassing 100%, have seen a surge in demand for US dollar-backed stablecoins, including USDC and USDT. On local crypto exchange Bitso, stablecoin transactions accounted for 39% of total purchases in 2024 as the most sought-after digital assets, Cointelegraph reported. The lack of banking access has also created systemic inefficiencies in the region, including technological barriers and high startup costs, which are slowing the flow of investment into LATAM capital markets. Still, the region's liquidity latency issues may be improved by adopting blockchain-based instrumentation such as real-world asset tokenization. Oh my God, according to an August report from Bitfinex Securities. And then they describe tokenized products. None of that matters. What matters is a rapid adoption, even if it's the use of stablecoins. It doesn't matter. Sorry for the pause there. I'm thinking, because it's like, I know what I should say is that it's all shitcoin and it's all going to zero, but stablecoins are not going anywhere. Altcoins are actually themselves not going to go anywhere. They're worthless. Oh yeah, definitely. But stablecoins have product market fit. That means, oh my God, Dave, you're saying that Bitcoin's going to go away. No. You need a backing for all of this crap. Tether, this is one of the reasons why I don't hate Tether. God, it's just the amount of hate that I see Tether get on a daily basis. It is amazing. Maybe they're right and I'm wrong. Maybe I should hate Tether, but you know what? For right now, I don't. I've actually seen them build a product that has product market fit. They've backed it the right way with Bitcoin, gold, land, and agricultural endeavors in Latin America. They've got 75 people that generate billions of dollars in net revenue every quarter, which is freaking phenomenal. That's why I know this thing's got product market fit. So they're backing it the right way. They've got a good product. I'm not angry at them. In fact, I think they're actually greasing the wheels for Bitcoin, not just as a backing, but with what we see occurring with things like eCash, Fediment, the wallet that I talked about was it yesterday or the day before, that allows Liquid and Lightning Network and Bitcoin to basically all be interchangeable, all within one device. When you add nostr into all this, what you're going to end up with is this interchange between Tether stablecoin and Bitcoin. And while Tether's going to back with physical Bitcoin is also going to be present as a swappable asset for stablecoin in the form of, at least in the form of Tether. And I honestly don't find this unappealing. Do I use Tether? No, I do not. I have never used Tether. I've never had a need for Tether. I just use Bitcoin. And there's a lot of people like me, but there's also a lot of people that are going to start using Tether. But they're going to be, at that point, they're going to be trained how to use this technology. And it's not going to be very far away. It's not a big step to go to Bitcoin. But the truth is that both are going to be used. That's the hard truth. Bitcoin is not going to supplant Tether. Tether is not going to supplant Bitcoin. They're actually going to work in concert with each other, and it's probably going to be pretty cool. And I understand, if you hate me right now, I get it. I understand. I may be fully wrong about the guys behind Tether. They may end up with the most gigantic rug pull on the face of the planet. But because I don't know if that's going to happen or not, I can only go with what I know. And when they buy the amount of Bitcoin that they buy, they clearly have some conviction. They're also the same kind of people I was talking about earlier. They're also they don't get nauseous when they talk about gold. What we really need to do is stop worrying about each other as the enemy and focus on the real enemy, and that's fiat currencies and central banks and the regulations that force us to be apathetic about the questions that we need to be asking. What is money? What does it cost? Where does it come from? What is wealth and what is legacy? That's it. That's it. That's the enemy. Not asking those questions daily to anybody who will listen. That's the evil. We don't need to be worrying about each other right now. And by the way, I group altcoins in with all that because they don't know what it is. Tether bridges the evil because it's still backed 1-to-1 with the evil infrastructure over there. But I guarantee you that we're going to have to bridge the good and the evil so that we can win. Because right now the rift between the two is so great. And we don't have the weaponry on our side like ICBMs to launch a full-scale attack against them. Or at least we haven't had until now. Until now. Tether's going to remain being that bridge between the fiat currency world and our world, but they're backing it the right way. They got physical gold, they got physical Bitcoin, they got physical land. They're not stupid. Until they become stupid, I'm not going to hate them just because, it's kind of dumb. Now, speaking about Tether again, Tether joins a $39 million funding round in, quote, programmable Pave Bank. Pave is spelled P-A-V-E, as in pave it with asphalt. R.T. Watson from The Block. Tether Investments has invested in a $39 million Series A funding round, which will be used to scale Pave Bank, the world's first programmable bank built for digital assets and the AI era. Ooh, this sounds like they might be swimming in the same pool as Brian Armstrong and Coinbase, which we just covered in the first half of the show. Quote, the global financial system is moving towards regulated on-chain finance, and institutions needs a trusted bridge between the old and the new. Pave Bank co-founder and CEO Salim Dathiani, I can't pronounce it, said in a statement, quote, we have built a multi-asset bank that merges the stability and prudential oversight of traditional finance with the automation, speed, and intelligence of digital assets, end quote. Pave Bank bills itself as a commercial bank designed to service clients who have needs across both fiat and digital assets. The bank, which has a license in Georgia, said it will use the capital to expand its regulatory footprint, accelerate product development, continue to build institutional-grade infrastructure, and scale its client coverage across global markets. Tether, which is cash-rich thanks to its overwhelmingly profitable stablecoin business, has a diverse investment portfolio that includes, quote, payment infrastructure, renewable energy, Bitcoin, agriculture, artificial intelligence, and tokenization, end quote. Pave Bank Series A was led by Excel and also included the participation of Wintermute, Quanta Capital, Helios Digital Ventures, among others. Quote, Pave's programmable full reserve approach combines the best of traditional banking and digital assets and has the potential to catalyze widespread adoption of stablecoins, deepening financial inclusion across markets, said Quanta Capital's Ganesh Regaswamy, I think is how you pronounce it. So it sounds to me like this bank is definitely swimming in the same waters as Brian Armstrong. My only problem is I hate it when they say it's registered in Georgia. The country or the state in the United States? It's not clear. It was not made clear, and I'm, not going to go find it. So it looks like Tether is entering into the banking game. They're not going to stop, y'all. They're not going to stop. At least Paulo Ardoino's name was never on the New York agreement. At least he can say that. Now, Bitcoin on a prepaid card? Moon Incorporated raises $8.8 million to make that happen in Asia. So we'll have to wait. Micah Zimmerman, Bitcoin Magazine. Moon Incorporated has raised $8.8 million to launch a Bitcoin prepaid card in Thailand and South Korea with plans to expand across Asia. The company, a leader in prepaid connectivity and digital asset solutions, confirmed the successful 65.5 million Hong Kong dollar fundraising earlier today, and the round was supported by a consortium of Bitcoin miners and investors through the issuance of, yes, you guessed it, brand spanking new shares and convertible notes. According to a note shared with Bitcoin Magazine, quote, the successful completion of this private placement marks yet another critical milestone in Moon Incorporated's growth, and we are grateful for the confidence our new and existing investors have shown in our long-term vision, said John Riggin, CEO of Moon Incorporated. Suit speak. Just, that was pure suit speak. According to a filing with the Hong Kong Stock Exchange, the proceeds will support Moon Incorporated's Pan-Asian expansion, starting with Thailand and South Korea, alongside the launch of its Bitcoin-enabled prepaid card. The cards enable users to acquire, store, and transfer Bitcoin without the complexity of traditional wallets, merging Moon Incorporated's prepaid telecom expertise with innovative digital asset functionality. In other words, the cards are going to let people buy and send Bitcoin easily without needing a separate crypto wallet, basically like a prepaid phone card. Looking ahead, Moon Incorporated is evaluating Taiwan, Japan, and Vietnam for future growth opportunities. Riggins framed the fundraise and new prepaid card as a step toward bringing traditional capital markets within the Bitcoin economy, leveraging Moon Incorporated's existing wholesale telecom distribution networks. Quote, we see this as more than a fundraise. It's a vote of confidence in Hong Kong's role as a gateway for regulated digital asset innovation, yada, 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 more suit speak, more suit speak. Back in March, the company became the first publicly traded company in Greater China to adopt a Bitcoin treasury strategy, integrating Bitcoin into both its balance sheet and retail business model. The fundraising follows Moon Incorporated's majority acquisition by Sora Ventures and UTXO Management earlier this year, a move that accelerated the company's strategic initiatives and broadened its digital asset offerings. In addition to the prepaid card, Moon Incorporated also announced they were named one of Hong Kong's 10 most innovative companies by Capital Magazine. Quote, we're honored to be recognized for driving Bitcoin adoption in Asia, particularly through our prepaid Bitcoin card, Riggins said. So, is it bad or good? I don't know. Depends on if it works or not. What's odd is that it's very clear that Moon is a telecom distribution company first. They're actually in a catbird seat when it comes to being able to do stuff like this. It's one to watch, boys and girls. Definitely one to watch. And finally, Polymarket seeks investment now at a valuation of 12 to $15 billion. Oh my God. All right. So we talked about Polymarket the other day. It looks like they want more money. So prediction market Polymarket is in early talks with investors for a new investment at a valuation between 12 and 15 billion, Bloomberg reported. That level would mark more than a tenfold increase from its 1 billion valuation back in June, when it raised 200 million in a round led by Peter Thiel's Founders Fund. So then it goes into the history of Polymarket, which we don't need. We know what Polymarket is. It's a prediction market. It's just that not just a couple of days ago, Polymarket was in the news that I was telling you about, was somewhere around an $8 to $9 billion raise, and it looks like so many people want to get in that they're going, well, let's do 12 to 15. People are looking for exits. They want to get their cash into something, anything. The housing market is too overblown right now. I mean, that's what's going on. It's not that I'm saying that there's going to be a blow off top in real estate. There needs to be. These houses are not worth what they're worth, but they are, as they remain worth what they are right now, or at least what they're valued at right now, which in my opinion is too damn high. People don't want to put their money into it because they're probably worried that the housing market is going to crash. So they don't want to go into housing. They're looking for any place in the world that they can put their money. And so am I. Thankfully, I've got Bitcoin. How about you? Have a good day, and I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.